Hello, folks. Good morning. This is Srini from Techie Investor. Today, I wanted to quickly talk about the FOMC meeting that is happening currently in Washington, D.C. And it concludes tomorrow afternoon, and we will be hearing a speech from Jerome Powell at around 2 p.m. EST. So in this video, I wanted to quickly talk about how we can position for the FOMC meeting. Usually there are about 8 FOMC meetings per year. And every time there will be a lot of volatility around these meetings. Will the interest rates be cut, or will it be raised? Those kind of questions are always answered in the FOMC meetings. And also they talk about the state of the economy, whether we are having the inflation in check, or if how are the core CPI doing, those kind of things, right? The good news is for this FOMC meeting, and this FOMC meeting is very, very critical from the trader's point of view. For the reason being is for the first time we saw, based on the data that we got about a couple of weeks back or a week back, I'm not sure, we saw that the inflation was around 2.5%, which was in line with what the Fed wanted to cut the interest rates. So, which is a good sign. Now, even the jobs were pretty bad. The job report, basically nobody, pretty much all the tech companies have stopped hiring, and even the job market was not that great. But today we had a surprise where the consumer spending went up. They were expecting minus 0.2%, but we saw a plus 0.1% the consumer spending. And that's why we saw all the retailers going up today, like Amazon, Tesla, those kind of stocks went up today. But again, they are pulling back. This is very usual in the sense just before the FOMC meeting, this happens, they pull up all the stock, then they pull it down. That means the volatility is going to be very, very high. What is the expectation from this FOMC meeting? It is a given that Fed, based on the data, would be cutting 25 basis points, and they would not cut any further. That was the assumption. But however, some of them are expecting a 50 basis points because the economy is really getting into the worst state. They believe that it is good to cut 50 basis points because we are in a pretty bad shape with the job market not doing so good. And definitely we need this to revive the economy. For example, the housing market has been pretty bad in the sense first of all, there are not many number of sellers that were in the market because of the high interest rates. Because even if they could sell the homes, where they didn't know where to go and buy their homes, and they had to pay higher prices. And even the buyers were not that great because the interest rate was so high and the prices were so high also because of the inflation. Now, with the interest rates cut, we are expecting that the housing market to pick up because now the buyers could come in. But however, with the jobs being lost, which is what the Fed wanted, because so much money was pumped in, they wanted the jobs to be cut so that the economy comes back to the normal. So with the job being cut, will there be enough buyers even if there are sellers? That is the big question right now. And will it lead to deflation with the sluggish prices? So that is what we are in the dilemma right now. So that is why some of them are expecting a cut of 50 basis points so that they can revive the economy better, even though there are so many job losses, right? I hope that makes sense to you. Now, what we are expecting is, I think personally, we would definitely see a 25 basis points. And the Fed would be very, very cautious and say that they would be in line with cutting one more 25 basis points, maybe in the coming 3 months. I think that's what I'm expecting from the Fed. And I don't expect a 50 basis points for that. Okay. So that is the scenario that we're playing, but you never know. Maybe they see something, see some data that shows that we are getting into a deflation thing, which is not even good for the economy. And so they might even cut 50 basis points. I'm not the expert in it, but it could happen. So that's pretty much what is the scenario. Now, as a trader, how am I going to position for these? For me, the basic thing is, how are the indices doing? Because if the indices are not doing well, and if the volatility VIX is doing very, very high, I would definitely stay away from the market. Okay, so that's my take on it, and it's definitely a good idea to sit on hands on the hands during this Fed meeting, because the market, when the Fed announces the 25 basis points, it might go up. But when the Jerome Powell starts talking, and they tend to go down too in the market. So it is very volatile during the Fed meeting. So it is very critical to digest this information completely and make a move only after after you get all the information, and then decide, okay, where the market is heading. Okay, so but without further delay, I wanted to show you where the indices stand right now, and where it could be for tomorrow, and how I am looking at these indices, and how am I looking to position. So without any further delay, let's look at the chart. So this is the SPY charts, folks. If you look at the chart, there was a breakout in the morning in the pre-market. It went to a high, and also it went to a high after it opened up to 566.58, which is an all-time high, but it is retracing back right now. So definitely this is telling us that something is that it is not looking good for the FOMC meeting that is tomorrow, when Powell is going to start. Okay, so definitely you want to look at this. Similarly, I want to look at QQQ. QQQ is also looking bearish. It went over the tops at 477.60, but it is pulling back. So this definitely tells us that the market doesn't want to go up for the FOMC meeting. But having said that, if you look at IWM is the only stock for currently which is in an uptrend. It is right below above the line and these things. So definitely IWM looks bullish for tomorrow, unless this comes and closes below these lines today. Okay, which I don't expect, but anything can happen, right, folks? So definitely you want to take a look at this and see where it is positioned, right? So definitely IWM looks very, very bullish compared to SPY and QQQ. And it makes sense, right, folks? Definitely, we have seen SPY and QQQ move very big because of the Max 7 stocks, but IWM has not made a move because of these interest rates. So definitely, we want the small cap and the mid cap stocks to catch up with the market, and that is why we are seeing this IWM very bullish. So for me, the first target for IWM would be around 232. So that is the area I'm targeting it for. So that is where we want to. So for your information, I am in IWM October 11th, 225 calls, folks. So just but not a lot, it's a half a lot. So definitely I want to take that risk and position for the FOMC. So that's what I am positioning for. So this is what I wanted to share you, folks. So definitely avoid SPY and QQQ for now for the FOMC meeting, unless you see that really going above the breakout lines with conviction. So folks, so far we have seen that IWM is the strongest of all the indices. So I was also thinking, how do I position for these stocks in the IWM apart from this trading the index itself? So on the chart, you see the heat map of IWM that I've shared with you. I have a membership with Unusual Whale, so they give this heat map, but you can get it from any of your trading platforms also. So if you see here today, most of them are in green and might be set to go if IWM goes up. This is a good way to look at all the stocks which are moving up. And what I am planning to do is look at a couple of stocks that could move tomorrow along with the IWM index. So that is what I'm looking for. All we need is one or two, folks, not more than that. So hope this information is valuable to you. So check it out, check out the heat map and see if you could find one or two places that you could profit from the move if IWM moves after the Fed meeting. Okay, definitely, folks, anything can happen. So make sure that the IWM is moving in the direction that we intend to, and then look at this heat map. Okay, that's all I wanted to share with you, folks. Before you leave, make sure you like, share, and subscribe to this video so that you can get more content on the trading strategies and the market analysis. With that, I'll catch you in the next one.